Good morning, viewers. Interesting night overnight with the ECB, the European Central Bank, raising their rates by a surprising 50 basis points, or 0.5%, from zero up to 0.5%, and all at the same time, the Italian Prime Minister, who was the former head of the ECB, Mario Draghi, quit. And yeah, it's pretty volatile, as you can see. This is an hourly chart of the euro. This is around the ECB, and it certainly sent bond markets into a bit of a tailspin. And the bond markets don't believe the ECB can stop defaulting Italy, or fix the defragmentation which is happening in Europe. And so, yeah, I think the market is colloquially called bullshit on the ECB. What that did for the US dollar, because remember this is 58% euro, this is a basket of currencies, and it's 58% euro, so it's pushed the US dollar back towards the lows of the day. It has got a higher high and a higher low. And normally you'd go, yeah, well, that's a reasonable opportunity, as we discussed yesterday. However, closing on the low would suggest that there's some more downside selling to come. We've got this fib here, and it's holding on to the 50 fib, but the 618 comes in line with this previous high, so that's my preference would be to the 618 is the stronger, so I'd be looking to sort of get long somewhere in this blue box here on the US dollar. That's from a technical point of view. From a fundamental point of view, we're midweek next week, Wednesday night or Wednesday morning in the US, or Thursday morning our time, so Wednesday evening in the US. We'll have the FOMC. And they're expecting to go by 75 basis points themselves. So I would look, yeah, it's going to be tricky. It's only 4 trading days after today to get there. And when you look at the bond market, the US bond market, this is the 10 years. On the ECB announcement, the yield started to tank. So the market's pricing in, or starting to price in rate cuts, even though next week we're going to get 75 basis point hike, which will put the US at 2.5%. The Fed's dot plot suggested they were going to go all the way up to 3.5%. However, I think the market is looking at this 2.5% as being the peak, and we're getting that sell-off. So at 2.5%, there's no meeting of the FOMC in August. The next one's in September. And that'll be the key to see whether the Fed will raise rates. But we've got a lot of, I guess, price information between next Thursday and the following Fed meeting in mid-September, and which will sort of, the market will be sort of moving off that kind of information. Whether or not inflation has peaked and is starting to show some weakness, and so on and so forth. Also next week we'll have Australian inflation numbers coming out on Wednesday, and that would be key for Australia as well. So from a technical point of view, getting long US dollars for a safe haven asset, it makes sense, but from a stronger economy, it doesn't necessarily make sense, as their economy is starting to show signs of weakness. They had a number yesterday, manufacturing index, which is -12, which isn't great, and the unemployment claims also increasing, and the other one was AT&T, which is the telecommunications company in America, and reported and had major miss on the report. And it was interesting to note that one of the reasons that they missed their profit targets was that they had a large number of defaulting clients. i.e. the consumer can't afford to pay their telephone bills, which is kind of systematic of what's happening in the US with massive inflation and no real wage growth. So the consumer is actually really struggling. The consumer is 60% of the US economy. So yeah, a bit of conflicting data there. So I'd keep an eye on the bond market, because that's where the smart money trades, and kind of follow that direction. And if the bond market continues to weaken, then the US dollar strength will struggle to hold. Okay. Opportunities to buying the US dollar there would coincide with the euro sort of coming up here to meet that neckline of the head and shoulder pattern that broke a few weeks ago. Aussie dollar bullish engulfing bar, getting towards the top of its run, but looking for it to fade it at some point, and I don't really see any decent technical setup there. There is one on the German DAX that I do like. However, you've got this ring high formation off the moving average, off a resistance line, and similarly you've got the Euro stocks. However, stocks seem to be aggressively bid, particularly in the US, so it'll be hard to try and sell the DAX with that happening, because the DAX will kind of follow, not in lockstep, but will kind of follow what's happening in the US. And VIX is back down towards the lows, so the risk is certainly back on, and markets are buying again. However, when as soon as you say that, you go and have a look at safe haven assets like gold. Need to have a massive turnaround on the ECB. Safe haven asset, big buy, and haven't looked at crypto, but no doubt Bitcoin probably also had a big buy around the ECB. Yeah, not a big one, but certainly a bit of buying coming back in. In fact, I don't know enough about crypto to discuss it from a fundamental point of view. The only thing I see Bitcoin as is not necessarily a tool, a financial tool. It's more of a asset like gold, where it doesn't pay you any interest, but it's a store of value, but you can't really use it in terms of well, you can use it for payment of goods and services, but don't know enough about it. But from a technical point of view, that looks like a good buying opportunity. Yeah. And with that, guys, I'll leave you for the weekend. There's a raft of PMI data, that's flash services and manufacturing out of Europe, and a few out of the US as well, which might create a bit of volatility that you can trade. But otherwise, you guys have a good weekend, and we'll see you on Monday.